It is 28th of July on a Thursday. Time is 11:30 a.m. in Singapore time. My name is Dylan and welcome to my daily on the spot trading analysis video. Alright, so yesterday night we have the FOMC statement. It came out to be not show any hawkish sign, hawkish tone, that the Federal Reserve will raise rate sooner enough, but rather they they still remain the same. By saying they'll raise rate gradually. They have to see more economical data, see how the labor markets will develop, how's inflation. So everything is back to normal. We are still back to the data, back to one. So that's why I think that causes a plunge for the dollar, as most traders took profit on that trade, because obviously after this the dollar strength will start to diminish, and we'll have to wait for more data to come in before we can decide where the direction of the dollar will be going towards to. Alright, so that's for the dollar itself, and that is why we see that dollar franc has plunged, broke below the bottom of the rising trend channel. That signals for the price to fall further. This is not going to be a major reversal, but rather I can see that a very huge retracement, a very major retracement will be happening right here, because tomorrow Friday we have the Bank of Japan monetary policy meeting minutes. So that will be very and extremely crucial for the Bank of Japan, because right now the sentiment for a additional monetary stimulus is so high that they cannot afford to do nothing. And because if that happens, then they are potentially they will cause yen to appreciate all the way beyond, or rather for dollar against the Japanese to plunge all the way beyond the 100 level, or all the way to 98. So it's going to be a very it's going to be very hurtful for the economy if that happens. And so the most likelihood right now, it does seem that anyway more than 80% of the economies are betting that the Bank of Japan will definitely introduce or add additional monetary stimulus that will of course cause the Japanese yen to depreciate, weaken, and then we'll see dollar yen to appreciate. Later I'll be touching on dollar against Japanese yen. But back to the dollar against the Swiss franc. If Bank of Japan would add stimulus, then definitely that will cause a demand for safe haven assets, and we have Swiss franc right here. Swiss franc will then appreciate. That will cause the dollar against the Swiss franc to plunge another time, and that will help us to complete a very major retracement, and from there we're probably going to see the price just going sideways and stuff like that. But anyway, if you are looking at that direction, then you may want to look for the sell. And if you want to look for the sell for the dollar against the Swiss franc, usually my experience of after the price has plunged, we'll usually see a little bit more of a retracement to a higher level. We have a little bit of structure right here, so we might want to wait for the price to make a bit of retracement, maybe somewhere to 98.68 to sell. And in any case, whether you were going to sell it at this price or this price, my suggestion to set a stop loss would be at least above the this key resistance level. I would suggest about 25 pips above this level. So you set it here, your stop loss would be about 50 something to 60 pips of stop loss. So yep, so that's pretty much for the dollar against Swiss franc. And how low it can go, that really depends on how much you retrace. But if I just measure it from here, it can go all the way to 97.66. That's just one of the support level that we have with Fibonacci retracement. Let's see what it is. This is somewhere at the 38.2 retracement level. Right, so there you go. And that's for dollar against Swiss franc. Whoa, that's about 4 minutes, 5 minutes. Now dollar yen. So dollar against Japanese yen. If since we are so optimistic about a additional monetary stimulus, that means to say the yen will weaken. But definitely I do believe that itself has been priced in. If you look at the 4-hourly chart, the reason why it has appreciated so much was because RBI announced that there will be fresh stimulus, and that's already priced in. So even if that happens, I don't think that we will see the Japanese yen weaken way too far I cannot be so sure, but just that I know that the market is pricing. Alright, so if they were to cut, definitely we will still see the first impact is that the price will appreciate. Alright, and just take note that day one chart itself, there's a major falling trend line that kind of has been broken. So I don't think that it will be. There is quite a high possibility it will go all the way, break higher and just appreciate all the way along the way. So right now at the current price, if you are pro towards the additional stimulus and for the Japanese yen to weaken, then you would like to look for the a buy opportunity for the dollar against Japanese yen. And right here I have seen, I've seen that the there was some I've seen that the dollar against the Japanese yen has more or less completed its retracement. I mean, if I look at the bigger picture, that will be somewhere like this, pretty much ended. At the smaller, the minor one right here has pretty much ended as well. So it came a little bit up. Now once we start to see price appreciated, then that will be the time for you to look for the buy. And in any case, this channel that I have right here, it still stays. Alright, we can still see the price is being resisted time to time. But one more time back to the same level, I do believe it will break above, and we have a pretty nice structure right here that suggests the price will appreciate further as well. So well, everything seems to be in pretty much pointing to the same direction. The dollar will appreciate, but in any case, if the Bank of Japan failed to take any action at this monetary policy meeting, we're going to see the dollar yen plunge all the way back to the 100 or even beyond. Alright, there's some of the news that I've read as well. So yes, so that's for the dollar against Japanese yen. Let's quickly take a look at some of the other currency pairs we have right here. Euro against the US dollar. Alright, so due to the dollar plunge, we've seen the euro dollar went all the way up, broke above one of the key support and resistance level, 1.1023, so for the price to appreciate much further. You can see that this whole thing right here is a very huge range. So I wouldn't say that. So I think that it's going to be very possible for the price to go all the way up back to the one of the key major resistance at 1.1156. And at the same time, in the day chart, we have seen that the price is also falling within a falling trend channel, a major one, because it's a day chart. So it seems that there's still a lot of prospect for the price to appreciate further right here. But I do think that it's going to be more of a ups and down, or slowly till it reaches the top maybe. So in any case, you may want to look for buy opportunity right here, but right now it's halfway through the range, so you want to really wait for very significant retracement before you want to do anything. For me, I'll just put it as we'll wait and observe further. So I would rather see the price comes all the way back to 1.1023, get supported, and if I see the chance, then I'll just go for a buy the euro against the dollar. Ideally, I would like to see something like that. Okay, if I want to run, I'm waiting for, and from here usually I will see something that goes all the way up. Okay, this is just my imagination. All right, so that's for euro against US dollar. Okay, I have 1.5 minutes left. Let's go talk about one last currency pair, since Aussie against US dollar, because we know that the Reserve Bank of Australia is going to cut interest rate in August most likely, and thanks to the dollar, it has helped to push the Aussie US dollar all the way back to the 75 cents level, a level that the Reserve Bank of Australia will be uncomfortable with and will want to cut its rates. This benchmark that I talked about for few months was months ago, so this benchmark itself could have already dropped to maybe 74, 73 cents due to the global economy, things that's happening around, uncertainties are building up. I will have Brexit after which, so that benchmark most likely has gotten down. 75 cents could be a very uncomfortable level for them. Most likely they will cut interest rate. Right, as of now, that still stays. Right, unless yesterday itself, FOMC statement, they mentioned about the raise interest rate and stuff like that, but no, there's no such thing. So the Reserve Bank of Australia has to do something then, right? So right now we are seeing that the price is coming back to a resistance level at 75.31. Aussie US dollar, definitely I'm looking to sell eventually. I just want to know if there's still prospect for the price to appreciate further. To be honest, I will just stay aside and observe at least till after the Bank of Japan, because that will also affect the Aussie against US dollar in any case. So I'll just stay away for a while. Alright, but it does look like a pretty good price to sell, but there are prospects that the price can appreciate all the way back to the trend line here. What's this trend line about? It's one of the trend line right here, and in the weekly chart itself, we have a major falling trend channel. Price has yet to reach the top of the falling trend channel, so that could be possible as well. So you're going to be really careful about it. Well, I would suggest you to just stay aside. Our focus is really back on the dollar against Japanese yen, or any other currency pairs against the Japanese yen. If you are trading with it, you can just look at it as well. So that's pretty much for today. So just be very careful. Tomorrow, Bank of Japan monetary policies statement meeting, which is going to cause very huge volatility in the markets. So that's all for me. Thank you for watching, and I'll see you again tomorrow.